first Monday of the month, we're going to highlight technical reading for major index across Asian region, particularly the benchmark index. Okay, if you look on the screen, we would like to follow up the reading for our FTSE Asian 14 as we highlighted last week. So as per last week, we actually believe the rebound going to be kept. We expect further consolidation, but while the index was indeed trade lower, the downside was kept right within this blue line represented by Tenkan line. So the subsequent recovery saw the index create a new high-low structure. So in that instant, is actually giving some sort of indication that further recovery is still on the card. Now, a breakout move last Friday has pretty much give a stronger signal, and the breakout move in RSI also indicate that overall momentum start to improve, and this actually may lead into a further what we call that recovery, at least near term. If you look on the trend, the index is pretty much traded below so-called the Ichimoku cloud, so indication that the short-term trend is remain on the downside. However, we still believe there's a possibility for the stock to rebound further, with the upside could be kept within the current resistance level, right within at 10,450, which is also right within 61 point Fibonacci and 72% tabular line. So for now, you can expect a stronger recovery at least in the near term. Moving into Malaysia, for Malaysia, FBM KLSCI is actually doing very well. As we highlighted on the 1st April, the index continued to trade higher and taken out our immediate resistance at 1570. So in that sense, if you look on the long-term trend, we are definitely on the early stage of the bullish short-term reading. So as for now, we have what we call that expected to trade higher at least near term. Momentum remain elevated. If you look on the weekly chart, the RSI continue to bounce off its long-term and short-term average line, indicating momentum remain pretty much elevated, while the D-trend reading is still pretty much positive, yet to hit the peak, but we think there's more room for the upside. So we actually revising the resistance level higher to 1628 and 1685. This is to become short to medium term target, and of course the support also has been revised higher at 1560 and 1530. So that for KSCI. For small cap index, thing has been very well. Momentum continue to accelerate further as we highlighted earlier on the 1st April report. So in fact, as for now, the index has taken pretty much trade in the highest level since September 2014. So in that sense, we think more room for further recovery. So next resistance should be at 18,380 and 19,000, while the support has been revised higher as well at 1640 and 17,200. For Indonesia, the recent correction has completed after the index completed the wave C of the wave 2. So we're expecting the new wave 3 going to unfold on the back of the positive reading in MACD, and the index set to test the next resistance level at 7267 and 7454. So that's for JCI index. Meanwhile, for IDX healthcare index, so you are seeing a double bottom pattern, or I think there could be a variation of the what we call the cup handle as well, but in this case handle will be a little bit on too far, hence the reason why our analysts in Indonesia such as one tend to choose as a double bottom pattern. So the IDX sector actually trade higher, breaking out above their neckline and as well the 200-day moving average. So we're expecting to trade higher with the neck resistance at 1430 and 1472. For Philippine PCI index is actually looking quite different compared to the rest of Asian sentiment right now, because last week recovery or the gain was pretty weak. There's some rejection right within at 13 simple moving average, and the current structure still not that supportive. So earlier we expecting to trade higher, but it actually fell short to hit our resistance at 7055. So the subsequent correction could actually extend further as we expect further consolidation toward the at least our immediate support at 6340, while the next support should be at 5920, while we retain the resistance at 7055 and 7580. All right. For another index will be fishing index. Philippines Stock Exchange Industrial Index. Right now we're expecting a rebound actually. Because you see there's what we call a bullish divergence, a new high low structure in RSI, but a lower low structure in what we call that index, suggesting that the recent decline has a weaker selling intensity. Nevertheless, the trend is still pretty much down, so any rebound could be actually kept within the current resistance at 9,400. For Singapore, everything is actually improving for the first time, I think, since December 23. The index is actually breaking out above the consolidation for the past 4 months. Sorry, yeah, 4 to 5 months. So last 2 weeks breakout is actually quite solid, and we think there's decent chance for the uptrend to continue, backed by positive reading in both D trend and RSI. So building on the current momentum, we expect the index to trade higher with the next resistance at 3370 and 3440. Meanwhile, for another one, IS as REIT index, earlier we expecting a rebound. It did not actually pan out, as selling pressure continue to emerge within 13 moving average. But despite the so-called consolidation, the index did not break the major support. So right within 960 point. Last time it was forming a double bottom. Now with this particular pattern, it could be a triple bottom in progress. So pending what we call that a breakout above its pattern neckline, we're expecting at least a rebound in the near term, with the next target is actually pegged at 1042 and 1090. For Thailand, the SAT index also expected to trade higher despite stronger selling pressure for the past few weeks, but it was actually forming another bullish divergence. This is quite similar that we've seen on one of the index earlier. Now, lower low structure in index, higher low structure in momentum indicate that the selling pressure has been what we call that much more weaker, and we're expecting a stronger rebound ahead. Net resistance at 1460 and 1515. Meanwhile, for my index also showcase a similar pattern. We're expecting the stock index to trade higher, looking to test the 440 and 500 point. Now, for Vietnam index, we actually expecting what we call that more range bound and sideways. The rebound could be kept, but for now, we expect at least a short-term, range bound in the near term. Resistance at 1230 and support will be at 1170. Same thing for the last index that we highlight today, HNA index, which is small cap for the Vietnam. So the pattern could be similar with the benchmark index, with the next resistance is actually at 236, and while support will be at 220. A rebound could be kept as we expect the index going to be range bound. Hey!